What's up, everybody? Happy Wednesday and welcome to episode 6 of the Bag Talk Show. So hopefully you guys are staying safe and you guys are ready to get started. You feel me? There's a lot been going around in the market and Rel and I are about to cover all of it for you.
We got a lot for them today, bro.
Yeah, absolutely. But before we get started, we got to handle some business.
Oh, are we moving militant?
Yeah, absolutely.
Don't say nothing.
All right, so 50%, we got receipts, right? 50% of you guys who are watching have not subscribed to this channel, right? And Rel and I put in a lot of work.
They must not know we box, bro.
Yeah, you feel me? Like, I'm skinny, but like, and he got muscles,
bro,
though.
He got hands. He got hands.
You feel
Don't
me?
mess around.
So we got team.
Like
Nah, but for real, like, we really would appreciate you guys who are watching to please hit the subscribe button right now, right? And hit that like button, because the more you guys support us, the more it fuels us to give content, right?
We might have to give them a second to go ahead and subscribe and like, because I don't think they really did it. They just listening. They not really moving, though.
You're right. It's a bad first step. All right, y'all ready?
Word.
All right, bet. All right, so honestly, thank you for that. Also, we want to let you guys know, if you are new to investing, right, or just starting your journey in financial literacy, we launched a pretty new series called Rookie Mondays, right? So that will be launching every single Monday, 7 p.m., where we're going to be talking about beginner level stuff and how-to steps, right?
Yeah, so Rookie Mondays is all for the beginner investors. If you're new to this, you hearing words, we using it like, I don't know what this means.
Yep.
Rookie Mondays is for you.
Yep. So make sure you check it out. We'll actually link the first episode in the description below, right? So make sure you check that out. But let's just talk about what's currently happening in this video, right? So we're going to talk about what's happening in the market and all the chaos, right? Why is it actually occurring? And then what you need to be doing to actually protect yourself. You feel me? So, Rel, let's just kick it off for them, bro. What's currently going on?
Man, what's currently going on? Everything is dropping, bro.
Mm-hmm. That's a fact.
Everything is dropping. It's like right now there's a market correction going on.
You
know, some people are misusing terms, which we're about to get into. But it's like you saw tech take a huge dive.
Yeah, that's
Crypto,
a fact. That's a fact.
You know,
like, honestly, I'm not gonna lie. There's been a lot of things that people are just panicking about, right? Like, you got articles talking about the stock market is a super bubble. It's about to crash, right? It's about to pop. Then you got stock market gurus, technical analysis gurus being like, no, really, you got people being like, yo, it's about to fall 20%, but do not panic. And then you got crypto losing more than $1 trillion in its value. You got Bitcoin and Ethereum dropping to its all-time lows. Well, not all-time lows, 6-month lows, right?
6-month lows,
which is scary, right? A lot of you guys are panicking. A lot of you guys are scared. And honestly, look, if you're new to this, we don't blame you, right? Like, we've experienced this before a little bit. But at the end of the day, that is what's going on right now. But before we dive into more detail, we need to make sure we understand this. This is not a bear market. Right? Like, can we say that again, bro?
Yeah, this is not a bear market, everybody. There's a difference between what's going on. We're dealing with right now is a correction.
Yep.
All right, there's been a correction in the market as of the recording of this video. Who knows what could happen?
Yeah, exactly, right? So obviously we know that right now, as he said, at this time, we're not headed towards, something crazy happening, and it's just a correction. We don't know what's going to happen. We don't have a crystal ball. You feel me? But just for your knowledge, right, what we mean by a correction is when there's a 10% drop in the most recent highs, right?
From the most recent highs.
So for example, if Microsoft is like $100, right, and it goes to 90, that would be correction territory. You feel me? It's between 10% to 20%.
And then when it's a bear market, it's when it's over 20%.
Exactly.
For a sustained period of time.
Right. And the crazy part about this is a lot of people right now that you're going to see on social media, and just like we showed you, right, articles are saying, yo, there's a crash happening, there's a bear market. We're actually not in any of those, right? Just relax and don't really panic.
Like, crashes come more suddenly. Like, for example, Corona. Nobody could predict Corona,
That's a fact.
Crashes come more suddenly. Bear markets, they kind of take some time to come along.
Right. It starts as a correction and then it goes.
Exactly. And it gradually makes its way into a bear market. It's a gradual decrease in the market. So once you're over 20% at a low, that's a bear market.
And to be honest with you guys, right, this is something that you need to understand. So we're talking about what's going on right now. There's actually been corrections before, right? There's been 6 market corrections before since the last bull market that started in 2009. It's actually healthy, right? We can't have stuff going up all the time. That just does not make sense. You feel me?
Corrections are literally what they do. They correct the market.
Exactly.
Corrections are good for rebalancing things that were overvalued.
Right.
They need to correct back to their actual value.
Right. And before we could dive into why this is happening, we actually found a pretty cool graph for you guys, right? So as you see on screen right now, every 1.1 years, there's a 5% correction. Every 1.6 years, there's a 10% correction, and then so on and so on and so on. All right. And as Tyrell just said, it's important for this to happen. It's healthy. You feel me? So now that you guys have an understanding.
I just want you to repeat. Is it healthy or what?
No, it's healthy.
It's healthy, everybody.
Right? So please don't be panicking right now. And this video we're trying to make sure you guys don't go crazy, right? So
stay calm.
Yeah, exactly. Just, we told you we boxing all, but you don't have to be scared. Just relax, breathe.
I know I'm scary and all, but like relax, yo. Keep calm and buy the dip. Straight like that.
Facts.
Put that on a shirt. Keep calm and buy the dip. Bag talk.
You feel me?
Word.
Nah, but for real, now you guys have an understanding of what's happening, right? There's chaos. Prices are dropping. Crypto prices, stock prices. But now let's explain to you why this is happening, right? Because it's very important to know. Just because the actual stock price or the crypto price has dropped, that does not mean the company or crypto is doing bad. The price does not reflect how healthy the company or crypto is doing. All right,
There's a huge difference. There's a huge difference between stock price and health of a company.
Absolutely. So let's just talk about why is this happening, right? Like what actually caused this?
What caused this correction? What is going on? Mm-hmm. Well, let's think about it. Take it back for a second. Mm-hmm. Take it back to March, right?
Of 2020.
2020. Take it back to March of 2020 when everything was all good and then Corona just hit out of nowhere. Boom, crash. Yep. The whole world was in shambles. Mm-hmm. We talked about the supply chain crisis, etc., and everything that came out of that. But anyways, all right. So the government has to, at the end of the Federal Reserve has to put money into the economy to keep us afloat so we don't just go under.
Right.
So the Federal Reserve is putting money out there, printing money.
Mm-hmm.
There comes inflation.
Right. Because when the actual, Corona thing was going on and the prices fell and people were worried about losing home and getting sick, they were like, yo, we got to step in, right? So they had to print money to help us out, right?
Exactly. Because money was lacking. People were losing jobs, etc. Mm-hmm. They needed to get money into the economy. And so inflation is when we said this on Rookie Mondays, you guys should tune in. Inflation is when they're printing so much money that money is losing value.
Right.
Because there's so much of it that it's not even that lit. It's not even that cool to have money anymore, in a sense. That's an easy way of putting it.
Honestly. Because at a certain point, bro, if you really think about it, when you're printing so much, it has to have a negative effect, right? Unfortunately, that negative effect was inflation.
Yeah, and prices are going up while the value of your money is going down.
Exactly.
And so, actually, inflation reached its highest level since 1982.
Right, exactly.
It jumped to 7% in 2021. That's crazy.
Right. And it's not even like it's an old article. This is actually as of January, right? 12th. Mm-hmm. Like, this is recent article as of US Today that's saying this. So it's not like we're just making all this stuff up. This is very recent. So think about it. It's hitting its high of since 1982.
Bro, inflation is usually around 2% a year.
I was just about to add that.
It just over tripled. Word.
Exactly. So just think about that part. And obviously with that happening and printing of money, it's going to cause something to happen. But, Rel, can we talk about one thing real quick, bro? What happens when inflation goes high, bro? What does the government end up doing?
So when inflation goes high at the end of the day now, I just want to point the fact that that's why stocks are overvalued. I didn't want to skip that part for a second. Right. So everybody has money. Mm-hmm. Think about it. Everybody has money. So everybody's buying all these stocks, buying risky assets in general. Mm-hmm. And then this is the part you're talking about.
Yeah.
The government has to come in and say, all right, we're done printing all this money.
Mm-hmm. Exactly.
So first of all, the Federal Reserve does a strategy like they rise interest rates, and they also do something called quantitative tightening. Mm-hmm. And quantitative tightening, they're just printing more money. Yep. All right. So quantitative tightening, they stop printing money.
Exactly.
All right. Quantitative easing is where they print money. They're about to stop that.
Exactly. Because at the end of the day, when you think about it, right? Mm-hmm. So let's just make this very clear. Obviously, when a lot of money printing was going on, people were buying stocks left and right. Everyone became an investor. Everyone became an option trader. Everything was going amazingly, right?
Yeah.
Prices were obviously going up, right? Like we saw Corona drop prices and then go up like crazy high in a matter of 6 months, all-time highs. So government was like, yo, we get this, right? Everything's going great in 2020, 2021. But we gotta step in. Inflation is out of pocket right now. We gotta control it. So now they're like, yo, interest rates, we're gonna increase them. So as you see on the screen right now, they're actually saying that the Fed is saying that there's going to be more than 4 interest rate hikes, right, of this year. So think about it. They're saying that like in the next every quarter they're going to increase their interest rates. That's a big deal.
Yeah, first one should be coming in March. And the thing is, that whole quantitative easing thing where they're putting money into the market to revive it.
Yep.
That's how we got out of the 2008 financial crisis.
Exactly.
So they took those same measures in the Corona crisis.
Exactly. Because they know it works.
Yeah, it works. But then what does it cause? High inflation. Mm-hmm. Now stocks are overvalued.
Right.
So they say we're going to stop printing money.
Right.
And then now you see everybody reacting to it.
Right.
Stocks are dropping. Everybody's taking their money out of risky assets. That's why you see things like technology, because technology is a volatile sector.
Right, exactly.
And so people are like, yo, I don't want my money in there. I don't know what's going on in the market. Mm-hmm. Uncertainty is what causes the volatility.
Right. And to that point, right, when we look at it, at the end of the day, we like tech, right? We know tech is going to run the future. However,
crypto too.
Right, crypto too, exactly. Right. But at the end of the day, when you look at it, since these tech firms, and as we mentioned before, since they're high growth companies, right, they borrow a lot from the bank. So they're like, yo, we want to take that money, we want to invest it. So if I'm a high tech company, I'm gonna be like, yo, you're a bank, give me some money, Rel, so I can invest it. But as we talked about before, with interest rates rising, they're not going to be able to actually borrow as much because they have to pay back more, right? So now those companies are not borrowing, which means they're not investing in themselves. So now the price comes back down, right? Because people realize that and they're like, yo, if you're not going to grow, I'm not going to invest in you, right? So it has an effect. Everything is cause and effect. And with the tightening you were saying earlier, just explain that one more time for them so they understand, bro. Like, what is that exactly doing?
Yeah, so the quantitative tightening, what it's doing is the Federal Reserve is not going to be buying bonds. They will not be, and buying bonds is just how they get money into the economy. Mm-hmm. All right, so they're not going to be printing money.
Exactly.
Therefore, people are like, yo, if they're not printing money, like, I can't be having the money I do have in risky assets.
Exactly. And then like the whole loan forgiveness program stuff, like that's stopping now, right? Like people have to start paying back their loans, right? Because interest rates are going high. So you're like, yo, if you don't pay, interest rates higher, give me that money. You feel me?
In the simplest terms, the fun is over.
Basically,
party's over. Like,
right?
Quantitative tightening is like saying, yo, the party is over.
Yeah, and as we said, uncertainty kicks in. The VIX, as I know Raul has mentioned earlier, it's a metric that basically shows how volatile the market is, right? The fear of the market, it's at an all-time high right now, right?
Yeah, man. The VIX on Monday, it hit 38.
Right.
Which is crazy because when the VIX is below 20, it shows that, you guys could check the VIX out. You could Google VIX and you'll see the number, right? When it's below 20, it's a stable market. Things are okay. When you see the VIX above 30, there's a lot of fear. It's an index that shows the fear in the market.
Right.
Okay, there's a lot of fear. So the fact that it hit 38 shows you how scared people are right now.
Right. And if you're one of those people who are scared, we got you, right? So now you guys already know what's happening, right? You guys understand why it's happening. Let's talk about what you need to do today to protect yourself, right? Mm-hmm. So we're going to start by saying this because we say this all the time. On this channel, we like value investing, right? Like, we're not going to tell you to go trade every single day. The best way to actually counteract everything that's happening is invest in good, credible companies, y'all. We say this all the time, right? Like, I think we're gonna get tired of saying it after a while. Like,
we gotta beat it into your head. Invest in not even good companies, great companies,
right? Like, so for example,
great cryptos.
Yeah, like we mentioned companies like Apple, right? We mentioned companies like Microsoft, like Disney. Like, they're taking hits right now, right? But if you think about it, they've proven themselves for over 100 years, bro. Like, they survived crashes, right? They've done their work. They know we know they're credible, right? And if you don't want to invest in actual single companies, we already mentioned funds to you guys, right? Top 500 stocks, right? You can get that by investing in something just simple as VOO, right? If you want to invest in a total market, VTI. If you want to invest in tech,
QQQ.
Right? So they're all down.
And by the way, he was exaggerating when he said Apple and Microsoft been out for over 100 years.
Well, yeah, like I'm saying how like we
they're proven, y'all.
Yeah, like at the end of the day,
it's been mad years and they survived everything.
Yeah, like I'm not. If you think about it, bro, if I could go back in time and be like, yo, in the 90s and 80s, like when stuff goes down, if I want to buy it, I would buy those companies, right? Like,
yeah, for sure.
Like, at the end of the day, when I say 100, I'm dragging it, but y'all understand the point.
You know, we getting that. Like, at the end of the day, invest in things that are proven.
Right.
Invest in things that have great fundamentals. So something we want to focus on is, in this time period, just because everybody's reacting to the Federal Reserve's moves, does that mean that the fundamentals of these great businesses have changed?
Nah.
No. If these businesses that you're invested in, their fundamentals are the same, they still spend their money the right way.
Right.
They still don't have a lot of debt. They're still great companies. You should be buying more while you have the stock at a discount.
Right.
I don't understand how you guys be so happy for Black Friday, but y'all don't be happy on these stock market dips.
Yeah, that's a fact. It's Black Friday right now, for real.
This
It's Cyber Monday
the
right
real
now.
Black Friday where you could buy assets.
Yeah, and for those of you right now who are saying like, I get it, I have to buy, I don't know what to do. Look, a simple strategy, we explained it before, we're going to say it again, dollar cost average, right? DCA. Take an amount that you feel comfortable investing in every single month, or bi-weekly, whatever makes sense for you, and just invest that amount into these funds, right? That makes sense for you. As we said, we can't tell you what funds to invest in. We're not like your financial advisors, right? So do your own research for sure. But at the end of the day, just use DCA to help you guys out, right? Invest in valuable companies on a monthly basis so you average out your prices. Doesn't matter if it's down. Does not matter if it's up. It does not matter if it's going crazy. Just do the same amount. Just average it out.
Yeah, and here's a big mistake a lot of people make. Everybody has heard the cliche thing, buy the dip, right?
Yeah, but
buy low, sell high, but they don't really do it, man.
Right.
And the thing is, when things go low, a lot of people panic. So first of all, you guys are selling low and buying high. So people like that are backwards. Yeah. And then there's other people who only want to, I gotta wait till it gets lower.
You can't time the market,
and you can't even time the market. No. So when it hits that low point, you don't even put money in because you're still thinking, yo, it's gonna go lower.
That's a fact.
That's why something that Hnu just talked about was dollar cost averaging. You guys should do that. Buy on the way down.
Right.
If you have a whole bunch of money to spend right now, don't spend it all at once when it hits a certain price. Buy it on the way down, because if you spend $10,000 at once, and that's all you have to spend, if it goes lower, you're gonna be tight. You're gonna be mad.
Yeah, and honestly, another tip we got for y'all, right, is this is supposed to be something we were gonna tackle in Rookie Mondays, right? But I'm gonna just put you guys on right now. So listen, I was talking to a few people. Y'all know who you are, right? They were telling me that, yo, I don't know if I want to invest in single companies. I get the funds, but I still don't know how to do it. So simple, very, very simple, right? Go to one of these brokerages like Ally, for example, right? Just literally Google Ally and type in Ally Robo Advisor, right?
Robo Advisor, right?
Yeah. So basically what a Robo Advisor is, it literally is a computer, right? And it actually asks you for your preference. So if Rel was telling me yo, I'm not a risky investor, right? I'm 26 years old and I'm looking to invest for the next 20 years so I could, save for retirement, right? It actually asks you these questions. And then what it does for you is it asks you how much you want to put in. Rel's like, yo, I want to put in $100 per month. All right, bet. It's going to take that money and then actually invest it for him, right? It's not an account that you get tax advantages for, yes, but at the end of the day, you're not really doing anything. Rel's not doing anything. He's just giving me money. I'm the robo-advisor, and I'm investing it, right? And it does it based on your risk tolerance. So it's a very easy way for you guys to invest. There's no excuses right now that you're not investing just because the market is crazy.
And a lot of y'all, a lot of people in general, of course, are not going to be as smart as a robo-advisor. These are computer-generated algorithms.
Yeah.
They're going to do a great job with your money.
Yeah, bro.
That's how I got started into getting into the market. I got into a robo-advisor called Acorns. Acorns actually even lets you, Acorns sponsor us because I'm out here giving y'all a crazy plug right now. Acorns even lets you invest your change. If I went to McDonald's and my meal was $1.85, right? That they're going to round it up. That means the 15 cents goes right into the stock market.
Yep.
They let you round up all your change.
Yeah, and honestly, as you guys start like that, I got started like that. There's a lot of people that start like that. You feel me? It's a great way for you guys to check it out. So that's two strategies right there, robo-advisor, right, and a DCA. And before we end this, right, we want to make sure we leave on a positive note for y'all. So peep this. We're going to list out some crashes that happened, right, and how they recovered. So in 1973, there was a 48% crash, right? Right after that, it hit all-time highs. Right? When I say it, I mean the stock market, right? Then there was a 1990 crash of 20%, all-time highs. 2000, 49%, all-time highs. 2008, 56%, all-time highs.
So what this is saying is every time the market goes down severely, it rises back up even better than it was before.
Right, and we're not saying that this is going to happen in the next year or so. It's going to crash and it's going to recover. Look, usually the bear market, if it actually enters the bear market, it lasts about 9 months, right?
On average.
Right? So think about it. We're telling you to invest in good, credible companies, good, credible cryptos by using DCA. And if you don't want to do it yourself, use a robo-advisor. But please, continue to invest. Do not just put your money in a savings account because it actually loses value, right? We talked about that on Monday, on Rookie Monday, so definitely check that out. But if you could do anything right now to help yourselves out, please invest.
Understand, yo, VC firms, they invested like $33 billion into blockchain and crypto startups in 2021. So for my crypto lovers out there, there's a lot of money in crypto. It's not going anywhere. Crypto is dipping, it's falling back. Yo, crypto has been, for example, Bitcoin. Bitcoin is something that's proven since 2009. You know how many like corrections Bitcoin has survived?
Right.
All these things are gonna survive these dips. Everybody's running away now. Yo, don't be the person who, when it rises back up, be like, dang, I should have bought when it was low.
Yeah, I was just about to say, people love to be like, yo, I should have bought when it was 20,000, right? I should have bought when it was 10,000. I should have bought Microsoft when it was like 150. Bro.
These are opportunities, bro.
Yeah, like, don't bait right now, right? So that's the message we have for you. So we just gave y'all some free game again, right? So what you guys can do right now is stop and like the video. Right? Like literally
like the video, bro.
And subscribe if you haven't done so. That's all we're saying.
Kindly.
Yeah, like, it's a request.
Love y'all.
It's a
love
request.
Y'all.
You feel me?
And subscribe. If you're watching this right now, please subscribe. That would be we would appreciate that a lot.
For real.
We spend time to make these videos. It takes a lot of research, and we want everybody to be great.
Yeah,
at Bag Talk.
Nah, for real. So honestly, right now we're gonna summarize this. So you guys have learned now, what's actually going on in the market, right? Like why is it actually occurring, the history behind it, and now y'all know what to do about it, right? So if you have any questions, please comment them below. We're going to try to get to every single comment like we always do. You could DM us, you could email us. Everything for our social media email is in the description, right? Also, we have some pretty cool freebies for you guys to download, right? So we have a stock market freebie, we have a crypto
stock
101
market ebook.
Yeah, stock market ebook, crypto ebook, and we have a monthly budget template, right? Everything is formatted for you guys.
You can make a budget for free. We have a whole template for them. You input the numbers, it's automated.
Yeah, exactly,
for
right?
free.
So just definitely check all this stuff out, right? And let us know if you have any questions, you feel me?
And don't forget, if it's not for you, if it's for your friend, your family, if you care about your loved ones, recommend Rookie Mondays. You should check it out, and so should your loved ones, because Rookie Mondays could get everybody on the right path to financial freedom. And Rookie Mondays is like we said, it's our new series that we launch in every single Monday on this channel.
Yep.
And it's catered strictly to people who really are just trying to get started.
Right.
So
exactly.
check out Rookie Mondays every Monday at 7 p.m.
The links are going to be in the description, you feel me? But that about wraps up everything we have for y'all today. It was a quick, nice episode for y'all to relax, stay calm, and don't panic.
Keep calm and buy the dip. Bag Talk. You heard it here first.
That's our sponsor. Where we translate wealth, baby. That's what we do. You feel me? But we're going to catch y'all on Monday. But until then, stay safe and peace.
Adios.